yeah, I was listening to some old school jams as well. What kind of phase? Do you have any music inspired phases when you were growing up?
Music inspired phase. Tupac, mate.
Is that what you were into?
Tupac. Tupac and Biggie. Yeah, growing up, man, we were fucking big into Tupac, Biggie, fucking into the American rap scene, mate.
Yeah, same. I'm into hip hop.
Was that even while you were growing up, like for your teens and everything?
Yeah, I
Oh
think,
yeah, maybe.
it's funny. I think listening to these rap music, they speak a lot about hustling and business and stuff. I think that's got it so ingrained into me just by listening to those.
Oh,
Because
so
if
you're not
I,
listening to any drill then?
even drill music sometimes, yeah.
You do as a drill as well. There is zero motivation behind drill.
I had you for a Mozart guy,
Mozart.
I had them for a Mozart guy, you know what I mean? Sitting there with the classical on.
I'm not gonna lie, I actually do sometimes hit a session to classical music or even like binaural beats. If it's really, really like busy, I can't deal when there's just crowds around me. So I'll just want to just shut out and I'll pick something that's just, even I'll stick it on like repeat, listen to the same like 5 minutes for 2 hours.
How do you fire yourself up to bench 315 with Mozart on?
I'm a distinguished gambler.
Scalping the 1 minute with fucking Mozart on.
You've got to have that peak brain activity. But I think like even when I'm trading, I think I listen to that. Do you ever? What's the name of a lo-fi beats girl?
Oh yeah, me too. I listen to the same thing, the lo-fi stuff.
And I get really excited when they change like the backgrounds, like the seasonal backgrounds. Oh, she's on an upgrade. It's Christmas. But I was listening to what came on. I think it was like Erasmus. Do you get those guys in the UK?
Who?
The
Erasmus?
Yeah.
No, I've never heard of them.
Really? There's some sort of Scandinavian, I guess like rock band. But it must have been when I was about 10 years old. Then I think the English radio stations here had probably 6 songs that they just played on repeat. And that was one of the songs. I can literally just like remember being 10 years old, sat in the car on the way to school, and this track coming on. So that's what I traded today.
I'm gonna have to YouTube it after the call now.
It's a sick track. It still is.
I
was a bit of a skater boy. I was a bit of a skater boy though.
10-year-old Adam with his tank top on.
There's probably a picture of 10-year-old Adam with a tank top on. My guns were bigger then. Probably when I hit my first cycle.
I think we should make a mesh Spotify track. One for training, one for trading.
One for trading and one for what?
Trading.
Yeah,
so one for the gym, one for the trading.
Yeah, I'm on it. I'm on that.
Yeah, I fuck about with Ableton, bro. I used to make a few little tracks in there.
Did you?
Oh yeah, I've got Ableton 11 studio on for. I went through a phase of just like I used to enjoy getting like Diva and put like all the different plugins because fucking I was using like Pirate Bay and stuff. Do you know what I mean?
Is that what you're gonna publicly come out with and say that you did? There's copyright music on Pirate Bay.
No, this is all hypothetical. OJ Simpson style.
Oh yeah. Maybe we should task you with putting together the Mesh national anthem. And what we'll do is we'll play it at the beginning of every call, and everyone has to like make a salute.
Oh, not that one.
What salute? You can't see my hand. You don't know what it's doing.
Careful with that
one. You don't know what it's doing. And when we meet each other, we've also got to like roll up one of our trouser legs and give each other some sort of weird handshake. Don't kill me, please. All right, let's get in.
Enable screen sharing.
Yeah, I got you.
All right, so we killed it this week actually. Every single trade we called out last week has perfectly hit our targets. So hopefully we can continue the same momentum into this week. So So last week, let's look at the fundamentals first before we look at this week's fundamentals, the upcoming. So last week on Monday, nothing. We had a bank holiday, President's Day. So Tuesday, we had flash manufacturing PMI. And if you notice the numbers with UK, the British pound, these numbers came in stronger, right? Up, showing inflation is still persisting. Nothing surprising there. Same thing with US. If you notice the number, it's came in green, again showing that inflation is still persisting, right? Which is perfectly showing on the Dixie, the dollar index, that US dollar is going up because inflation is persisting. These numbers should be in red if if inflation is dropping, right? So it's still showing that inflation is persisting. What else? We had the FOMC meeting minutes. FOMC meeting minutes are the minutes which were recorded when the meeting happened, the last FOMC meeting. So they are outdated, but sometimes a lot of traders look into this to pick up some clues or more details. But the issue with this was a lot of FOMC members were talking about 25 basis rate hike, but right after they were talking about the 25 basis rate hike, we had all the statistics such as NFP data that came out, and a lot of these statistics that I just showed you, showing inflation is persisting. And over the past 2 weeks, we had a lot of FOMC members hawkish, right? They were bullish on the US dollar. So in this meeting minutes, they said 25 basis point, but for the last 2 weeks, after looking at these current statistics, they have been talking about a 50 basis point hike, which is bullish for the US dollar. Yeah.
Has
And that
that
also
started to be priced in yet?
Yeah, that's it's perfectly getting priced, and we do see the Dixie move towards the upside. And a lot of traders are also weighing in that maybe there will be no rate cuts this year, right? Because at the start of the year, we were all expecting rate cuts or maybe even pauses, but at the moment we have no, there isn't any mentioning about rate cuts yet. So US dollar still remains very hawkish because they also increased the terminal rates. The last 2 weeks, a lot of Fed members have been mentioning terminal rates are going to go up. So a lot of people are now getting the bigger picture. So that's why we see a clearer direction in the market. On Thursday, we had a JPY bank holiday. So that nothing important there. So we had the preliminary GDP, right? So we have 3 GDPs. We have the advanced GDP, the preliminary, and the actual GDP that comes out, right? So the advanced GDP is when that's the first reading, right? Before. So therefore, during the first reading of the GDP, we have the highest volatility. This preliminary GDP comes in before the actual GDP. And if you do notice the number, that's coming a little bit lower, yeah? Nothing too significant, but a little bit low. Nothing, so there wasn't a lot of volatility due to this statistic here, yeah?
But this is showing that the rate hikes are working.
Yeah, it's a little bit lower, but it's contradicting, right? Because every statistic we have seen past few weeks, it's been green, right? And if you even notice the previous numbers, it isn't a big difference. It's around that range yet still. So there wasn't a lot of volatility with this. But what actually surprised a lot of people that day when this statistic, a lot of people were looking at this statistic, but the actual statistic that a lot of volatility came in was the price index. And if you notice the number, inflation is still persisting, prices are still going up, right? So that number there got a lot of US dollar bullish momentum during this day that I noticed. So this was important. What else did we have? So Friday was important for JPY because we had the new governor, the designated new governor, Ueda, speak. And like we spoke last week, he literally reiterated the same comments, right? So he still remains bearish on the JPY. He's going to be following the same monetary principles laid out by the previous governor, right? So that's why the trades we took on Friday, when I took a trade on Friday with GJ Long, it was also a fundamental confluence with this comments that he made. So that's why we saw a lot of JPY weakness and a lot of British pound strength, which I'll get into the charts. So this week also we have a good amount of fundamentals. So we have durable good orders and pending home sales. Durable good orders is also going to be, look at the forecast actually. That's a massive drop that's forecasted, right? Negative 3.7, and the previous month was 5.6. So that's, if this does number come in like this, that shows contraction in the economy. Maybe the rate hikes are working. But if number does come in higher, even high in the positive, I think US dollar still remains bullish. So this is going to be an important number to look at on Monday. What else do we have? The core durable goods as well. I think core durable goods, so it removes transportation. And if you look at the number, this is coming in higher, right? Contradicting. That shows inflation is persisting. So it's going to be interesting to see what happens here. What else do we have? Yeah, so FOMC members that are speaking, keep in note, are their comments hawkish? Are they bearish, right? Dovish. So again, we have the Bank of Japan's governor, Ueda, speak. This might give us also more insight to what he might do with the JPY monetary policy.
This is the new guy?
Yeah, this is the new guy. And also we have the core CPI for Bank of Japan. I'm not sure why this is the yellow folder, but this is coming out on Tuesday. And if you look at the number, it's stagnant, 3.1%, no change. Yeah. But if you look at the numbers for the previous few months, what's been happening? It's been going up and up and up. So I expect if the numbers comes in stagnant, we won't see much difference. But maybe if it does go in, come up higher, we might see a lot more JPY weakness possibly. Yeah, they're weakening the currency way too much. So we're going to see what happens. What else do we have? Consumer confidence. This is going to be important. And if you look at the consumer confidence, it's also going to come in higher. This is supposed to drop if the rate hikes are working. So consumers are still confident. Yeah. If you look at the previous statistics, I'm not sure why it's not showing here, but it's been going up slowly. Yeah. So this is important. Richmond Manufacturing Index also coming in higher from the previous month. Inflation is persisting there as well. Nothing surprising. Bank of England, Governor Bailey speaks, right, on the 1st of March. So this is going to be important as well. He's going to give us some insight on what Bank of England is going to do with the next Bank of England meeting. So this is going to be important. PMI, not a big difference, a little bit higher. So this is going to be, I don't think there's going to be a lot of volatility with this, but we're going to see what happens. So the unemployment claims last week, actually, it came in a bit lower. So let's see if they can continue that, the trend of unemployment dropping. But the reason, but this number should come in red actually, because if the economy is suffering, right, job growth is going down, then this number, unemployment, should be high, right? So we're going to see what happens there. I think that's it. A lot of FOMC comments made. Again, ISM service PMI. Not a big difference. ISM? It's the Institute of Supply Management. They're one of the there are a lot of you keep on noticing even with the job market. There's the ADP, NFP. These are government bodies that have their own statistics, the way they weigh in. So ISM services PMI is the diffusion index of the purchasing managers. Yeah, purchasing manager index. That's what PMI is called.
But excluding manufacturing. Okay.
Yep. So that's going to be interesting, and this is coming in very late on Friday. So let's see what happens. All right, let's look into the technicals then.
Dixie.
So let's look at the Dixie first. Yep, let's look at the Dixie first. I mean, look at this chart. It's quite beautiful, no? We call out that support so perfectly. Look at that bounce. I mean, this is very nice.
It's been following that trend down, and it bounced off. What level was that?
That was at let's call it 101.5.
So this is
and
what
it
we
bounced
called
off.
at the end of January, wasn't it? Where we saw that sort of volume die out, sell volume.
Yeah, we've been calling out like throughout this whole bearish market, a lot of people are euphoric. They were calling the bullish crypto market, bullish stocks, but we kept on saying we just wait on. Let's see what price does around here. And perfectly, once price came through here, we got a nice bounce. So that's the thing with the trading. You got to look at the long-term picture. Don't get stuck in short-term trends. So that's what we saw. This week we had a nice confirmation actually. If you notice the number that I mentioned last week, 104, we finally got a closure above 104. That's looking very bullish for the US dollar. Yeah. The reason is because now the trend has switched bullish, right? It's broken the last structure point on the weekly. The monthly remains bullish. The daily obviously remains bullish. So finally, we have multi-time frame correlation on every time frame on the monthly, weekly, and daily. Yeah. And look at the last daily candle closure, very bullish, very bullish. So nothing surprising here. US dollar remains bullish. So if you look at the monthly candle, we still have 2 days for monthly candle closures. Yeah. And what do we see with the monthly candle? Possible bullish engulfing. Yeah. So let's see what happens with that. We are bullish with the US dollar. BTC chart, you want me to open that up?
Yeah, go on. Open. Should we start with the CME chart first?
CME, yep.
I think it's quite important that you said you brought up the monthly closure as well, because that's it's in 2 days. We got weekly closure today, but then we've got a monthly closure. And I think looking at that, actually go back to the dollar index and go to your weekly time frame.
Yeah, this is the weekly.
Okay, so you see this kind of resistance that's being faced right now by that weekly candle. That resistance exists on what time frame? And I guess that would.
Which resistance you're talking about? This one?
Yeah, just see where the weekly candle's touching now. This
Oh,
week's
okay.
candle.
Okay.
This level looks to be a resistance. What level is that, by the way?
This level is 105.3.
Yeah. Okay. So this 105.3, it looks like a resistance level.
Yep,
So
there is this resistance here. Yep.
okay, so we could see ourselves consolidating in this range with 103 and that support level.
Yeah, with this, it's possible pullbacks has to happen
because we've got a weekly, we've got weekly closure today, and then we've got monthly closure.
Yep.
What if does the FOMC meeting tie in with monthly closure?
We don't have a FOMC meeting this month. I mean, the next 2 days.
CPI?
No, we don't have that either.
Okay, all right, no worries. Yeah, that was just what I wanted to check. Anyways, back to BTC. So just start with the 4-hour. So there was the CME gap that I called that needed to be filled on the group chat, and we filled that perfectly this week. I took that trade as well. Now we seem to be consolidating in this 4-hour range now, which you can see there. And do you just want to highlight those levels, what they are? It's 23K support.
23K was? And
a 25K resistance on the, and this is a 4-hour range that currently exists.
23K, 25K, right there, 25. Yep. And 24 as well?
Yeah.
24.
Now there is another CME gap that I think I mentioned in a previous call that needs to be filled from earlier on, around the 20K region.
20K. Oh, it's all the way down.
Yeah.
All the way down here. This area.
Yeah. So whilst the weekly closure last week was crucial, I think weekly and monthly closures this week are going to be even more crucial. So yeah, just to highlight that CME gap there around that region that still needs to be filled. So I think if we fail to hold these levels, we're likely to go down and fill that CME gap. What price level is that, MM?
Yep, that's perfectly around the 20K area.
There. Yeah, okay. Now just go to a normal BTC chart. I think actually go to the trading view chart for BTC because it's got more time frame.
Which chart is that?
Type in BTC
Mhm.
and you should see I think it's called BTC index or BTC USD.
This one.
Yeah, that's the one.
Okay.
If you don't mind just sticking a 50 and a 200 MA on that.
Okay. I need to add those indicators in one second.
No worries. The key one here right now, as I said, is there's the monthly closure in a few days, and that will really confirm if we're going to stay below this level for the rest of the month, well, for a longer time. So just give a few minutes to set that up.
Yep, that's done here.
Okay, so we had a bit of a contradictory where we had a 4-hour and a daily golden cross, and that contradict the weekly, which had a death cross. Now the 4-hour and the daily golden cross, you could see that it was probably a huge retail signal that took us up to these levels, but there was a few different factors, I think, as the days have moved on, and one of them was the Paxos regulation, well, the US going after Paxos and then Paxos agreeing not to do BUSD. So price inflation due to the amount of USDC that was printed in the same time. Another, I think, key thing that caused BTC price, because there's a complete uncorrelation. They're not correlated anymore to the NASDAQ. So BTC Network has just launched their own NFT collection. Well, it's not called NFTs, it's called ordinals. And that's generated a huge amount of volume. And essentially all of these is just that I think they've released the same kind of punks on BTC Network. And they're basically they've got a killer business model right now where they could just launch on any chain. But those have been flying. I think they've had a few, I think about 8 figures of volume, 9 figures of volume going through purchasing these ordinals. And I think it's a big move. But I don't think this is a realistic move considering the way the market's persisting and what MMU said with the fundamentals that dollar's still rising strong. So if we just go to the monthly time frame, I should go to the weekly. So whilst the daily and the 4-hour did break out, we still face resistance on this death cross on the weekly time frame. And I'll use the right word, the price action right now is respecting that death cross and sitting below it. And you can see there's a lot of rejection wicks there with volumes dying off. There's a lot more sell volume. So also looking at the monthly time frame, and this is also forming a rising wedge, but on the monthly time frame, I mentioned this before, this looks like a confirmation breakout, and we can see volume dying off this level. So we actually need to close above the 23, I think it's 23.2K this month, if we want to maintain price action above that level. But if we fail to close, we're going to see a much lower low.
Yeah, this looks like a nice confluence. This
Perfect,
looks like perfect. Yeah, I think this might actually drop. If
we look to the smaller time frames, I think on the 4-hour, you can see the volume's already started to die off. Yeah, perfectly, where the range is getting tighter on the 4-hour.
Yep.
Now it's forming a bit of a symmetrical triangle, and I think essentially price action could go anywhere because there's only really 200 points, so from 23K from where we stand right now as we do this call, and the level at 23.2K is such a minuscule change in value. So I can understand why this triangle is forming here of indecision. But our bias is still with the US dollar being bullish, is that we'll see price action go lower or consolidate in this range for a longer period of time until we get a fundamental. But once again, anything I'm trading right now, all of the spot buy levels that I announced like months ago, which I said were key crucial levels, I'm just taking all of my profits, putting them straight into BTC on the ledger. So that's the strategy I'm playing at the moment. I look at crypto as really just accumulation right now. And I think as much as I accumulated in the last bull run, I'll be accumulating more in this bear run as well. Should we do?
But you focusing just on BTC though, are you? Like you say, you're accumulating just BTC.
Well, like the ETH chart, and I think we'll go into ETH now, is more or less mirroring BTC. So any trades that I'm taking on BTC, the levels are, they're pretty much sitting at the same sort of resistance support level comparatively. I'm making the same trades there, but just adjusting where obviously my stop losses and my take profits are.
Yeah, sorry. I just mean like obviously you're not pulling profits out and going into altcoins. You're focusing on putting profits into BTC itself. Yeah.
Yeah, look, I think what I've done is I've got, as they say with any sort of alternative investment, if you're financially planning, you're going to take that sort of that big chunk of money you've got to invest at the end of every month. You're going to partition it up into various different investment vehicles, and they're all going to have varying rates of value. And look, generally people say, look, keep 2 to 5% towards alternative sort of high risk investments. But that's, I would say, an old school strategy. And I really, like, I'm a younger individual. I can take a lot more risk. I don't have any liabilities other than a dog. So from that perspective, like I do take a lot more risk. I say a higher percentage of my value is in crypto, but I'm also running a lot of USD lending protocols as well. So just keeping my dollars on chain and just letting it still work for me more than the banks are. So I do keep, I'd say, a lot more of my investment capital within not just the crypto sphere and altcoins and blue chip coins, but also within the USD protocols.
Happy days, nice one.
Yeah. You're looking at ETH. Like once again, ETH is pretty much the same. I think we're sitting at 1,650 right now. Is that what you've got? 1,600, 1,605.
1,605, almost 1,604.34.
Yeah, and right now we're respecting the 50 moving average on the weekly. And that's because we formed a similar kind of death cross scenario we're moving towards. And on the monthly, going up onto those higher time frames, this is where I'm paying attention because we've got those key crucial levels. And once again, like this is I think 1,650 is the key level here to break. A closure above that will see us go a bit higher, and you can see this is forming a symmetrical triangle like BTC is. So even on a monthly, I would say for Ethereum, it doesn't really know where it's going, which is different from the BTC scenario, where we see the symmetrical triangle appearing on the lower time frames.
Yep, it's pretty much the same chart. And the monthly is also the same candle, pretty much dying off.
Yeah. It's nice. It's looking good. But yeah, look, I'm buying into, on spot positions, I'm buying into BTC, I'm buying into ETH, I'm buying into Rune. I'm really liking what Rune's doing right now. They've integrated into Trust Wallet. So all of the swaps that are managed within Trust Wallet are effectively all decentralized swaps, and they're all native swapping. So I think as Trust Wallet grows and more users adopt Trust Wallet and Trust Wallet moves into this sort of, I guess, a layer 3 solution, where a layer 3 solution gets built on Trust Wallet, we'll see huge amounts of Rune pump. And it's just overlooked. At 1.6, it's severely overlooked. And the team and community is still really, really strong. Another altcoin I'm buying right now is Synthetics, SNX. I'll share that in the Telegram group as well. And what else am I buying? I'm putting a little bit in Solana, but not really that much. I'm kind of I still love the protocol. I think they're still going to do huge amounts of growth. But it's not where I see huge amounts of, let's say, development occurring right now.
Yeah.
All right, let's look at indices now. Let's get into S&P 500, the SPX. Let me close out these indicators. All right, so So it was an interesting week last week. If you look at our points, we had this. If you had taken this short position, not the previous week, the week before, and if you held the trade, that was a massive move. We had a small move here as well this week. So SPX was really, really good this week. Let me delete these points and redraw them out. Let's look at the monthly candle first. It's about to close, so we have 2 more days. The monthly candle still isn't telling us much. It's still inside that consolidation area, right? But why? Why do I say that? Is because notice the highs and the bodies of these candles still stuck in a range, yeah? But let's look at the weekly. The weekly candle, if you do notice, it is bearish, right? We see bearish volume, rejection, rejection, rejection. Volume started to die off, and we saw a nice bearish candle. But one thing I still would have liked was a closure below this structure point there, right? So if you notice that this candle, the current candle, what do we see? The candle is closed above the structure point. So therefore, we are still not completely bearish on this time frame. We still remain bullish, right? This structure point needs to break off and has to be used as resistance. That would confirm a bearish bias here. Let's look at the daily. Daily is clearly bearish, right? So we have a nice clear bearish move towards the downside. So this week, let's see. This week, what I would see is this area here at 39. Let's call it 39.70. Let's see if that makes sense. Yeah, 39.70. So if this area here at 39.70 breaks and finds a resistance, it needs to break, find a resistance at this area, then possibly that would be a nice higher probability short position, right? But if price does choose to retrace, right, chooses to retrace all the way to this broken consolidation area here, you can take a short position, and this would be a little bit of a lower probability short position. So possibly price can go all the way towards this area down there and then make a move downwards. So this area would be at, let's say, 4,087. Right, if you remember, supply demand is a zone, right, not an exact point. So you need to draw out your zone here. But just for simplicity's sake, I end up mentioning these price points. So let's call this 4086. Yeah. So this is what I would be looking at. The best probability would obviously be to take this, but if not, this short position. That's with SPX. So we were very patient with SPX. If you notice, throughout all these days, we just waited for our chance to show up. Yeah. Let's look at US 30 now. US 30 Dow Jones.
The way that volume was dying off on the S&P kind of says to me that I guess the next 7 days, dollar's gonna lose value to that next support level that we mentioned, and S&P is gonna rise to that resistance.
Yep. So US 30 is interesting. At the moment, we still don't have the candle closure, but this is starting to look bearish, right? We see a lot of resistance. 4 months price resisted this area there, the resistance. And what do we see with this current month? It hasn't closed, but if this current month closes below these lows, that's a nice bearish engulfing, right? Not only it's a bearish engulfing, possibly this is a structure point here, right? So if this candle closes below the structure point and also closes below the low of the previous month, it would be a nice bearish confluence. Let's look at the weekly. So the weekly is nice, it's very clean. So for the weekly, we have been waiting for the last few weeks, all the way from November, yeah? And price has been stuck in this consolidation, this orange box that I drew out here. What do we see this week? Finally, we got a break. And if you notice the previous week, the price point that I mentioned, if you took a small short position, that would have worked out. And I think even for this week, if I go down to the smaller time frames, there's possibly a nice short position you can take. Let's see. Let me go down to the daily time frame. So what do we see with the daily? Daily has been creating nice lower highs, lower lows, right? Structure broke, right? So let me actually draw this area out. Let's see. right? Let's go down to a lower time frame. Let's see. So this is a nice candle. What do we see here? What happened? Price broke through that consolidation area. And what is it doing at the moment? Finding resistance, right? At that exact point that I just mentioned. Where was it? At 32,850. So I think this, depending on how the market opens, this could be a nice short position area actually. Let's go down to the lower time frame. Yep, I think US30 might be primed to drop from here actually. So if you want to play this close to your chest, you can take this position before the Nasdaq market opens. But if it would be a better, higher probability, hopefully, if prices are still remaining in this range, to wait for Nasdaq market to open and then take this short position right there. Yeah, and I think this will occur tomorrow itself once market opens. So that's possible, right? That's possible. And let's look at the opposite scenario. If price does want to pull up, possibly if it does pull up and does it find resistance there, then possibly it can pull up there, or it can pull up. Let's see, where is it? It can pull up all the way up there. But the issue here is I don't want to trade inside this choppy consolidation range, right? So even if price does pull up here, possibly you can take this short position if you want to play it risky. But I would prefer if price actually finds resistance at the consolidation broken range and then drops. Yeah. So I'm going to draw this out just for the sake. You can take a lower probability position there, but preferably I would wait for 32,850 to find resistance. Yeah. So that's with the US30. Let me delete this. All right. So let's look at GU, British pound, US dollar. Let's look at the weekly. Actually, let's look at the monthly chart first. So what is the monthly chart telling us? If you notice the red line, that is my yearly trend line. So price has found resistance there, rejected. And at the moment, we are seeing a bearish engulfing, but not the highest probability. Highest probability bearish engulfing will be if these lows break, right? But if price still decides to close below the body here, that is still a bearish engulfing, but not the highest probability bearish engulfing, right? Structure is bearish on the monthly. Weekly, what do we see? Weekly, we had some choppiness for the past 2 weeks, but the last week we got some direction. So price broke through the last structure point there, found resistance, right? And this week it made a nice bearish move down. And I think we might see that same move continuing, because if you look towards the left side, what do we see? Price has, this area has a lot of momentum. Possibly we might see the same momentum repeat. Yeah. Let's look at the daily time frame. So the daily, if you look at the last week number that we mentioned, we got that move that we wanted. So you know what? I'm going to keep on the same point. The reason why is, let's look at the lower time frames. So I think price, if you notice, it's starting to die off a little bit. Volume is dying off, right? Look at the 1 hour time frame. What do we see? Volume is completely died off, right? So possibly we can see a short position occur there. Yeah. And I would only take the short position once price gives us a nice resistance formation here. Because the issue is here, I see a supply demand area that hasn't been retested properly. Let me draw that out.
Those are some dirty wicks.
Yes, these wicks are dirty, really dirty. So possibly price can find resistance there, or price can actually pull up all the way towards this supply demand area there. And possibly you can take a position there, but I would say if you do take it, take a lower risk over there. Yeah, because that is a nice gap in the market there. So let me actually mark out that price point there. This would be around 1.2, actually, around that 1.2 area there. Is it? No, it's 1.2100, I think. Yep. So possibly price can retrace all the way here and then find a move down, or price can actually go towards that daily structure point and find resistance, because clearly with this 1 hour candles, what do we see? Price is starting to slow down, right? So that would be the higher probability. If price still decides to keep on dropping, just don't take any trades. Just wait for price to come towards those supply demand areas and for a retest. Yeah. So that's the only two areas probably I'm be looking at with GU this week. Yeah, I think so. You know what? This 12-hour time frame, what do we see? There's a 12-hour structure point as well at that supply demand area there, and that also has to be retested there. So possibly very high probability that price can actually pull up all the way here. So keep an eye out on that supply demand area. Yeah. So let's look at GJ, British Pound JPY. Let's look at the monthly time frame first. So British Pound JPY has been the most interesting pair this week. And let's see why. What do we see with this candle, the current candle? We see a lot of bullish volume, a lot of rejection towards the bottom. Candle still hasn't closed. And if candle does close above this last structure point there, this would still be bullish. This would be bullish for the for this pair here on the monthly time frame. So that's going to be interesting. I want to see how the monthly closes here on the weekly. So the weekly has been the most interesting. If you noticed, all the way from the end of December, we've been waiting for 1, 2, 3, 4, 5, 6, 7, 8 weeks. 8 weeks of patience. We've been very patient for price to break out of this area. And finally, after 2 months of waiting, we finally got a break above, and we perfectly capitalized on the move that occurred at 161.750. A really good move, in fact. Let's look at the... So price has broken through, right? Let's look at the daily time frame. So daily time frame is also quite nice. Why? What do we see price do? Broke through that point that I mentioned. Broke through, came for a perfect retest. And a lot of other traders in our group and myself, we took a trade at this retest area here perfectly. And price went perfectly our way. So for this week, I think now that the retest here is done, I think let's wait for this next structure point here to break through for a trade, or if you want to be even more careful, more precise with this, you can take a long position, or you can wait for price to break through and find support, then take a long. Yeah. So let me mark that area off, and this would be at 163.5, a nice quarter point, right? So that would be an area I would be looking with GJ. Let's look at the lower time frames first. So yep, let's see. Let's go to the 4-hour time frame. So we do see nice lot of bullish volume here with the 4-hour as well. Let's go to the 1 hour. 1 hour is slowing down a little bit. Possibly price may actually pull back from this area, maybe towards this area here at 162.500, right? So possibly it can pull back, but I wouldn't take that long position there. That's a little bit risky, I think. So I would say just wait for price to be patient, let price to come all the way back up here. One thing to note this week, especially, I think you should trade tomorrow, 27th of Feb, 28th of Feb, which is the last day of the month. Me personally, I try to avoid trading that day, the last day, is because a lot of institutions and banks, they take a lot of profit taking at the end of the month, and that causes a lot of VIX or a lot of unexpected moves in the market. So last day of the month, I would prefer if you do not trade it. Yeah, that would be it would be best to set it out. Even if this move that I mentioned occurs on the last day of the month, if you want to take it, you can take it, but it would be best for you to avoid. Yeah, that's what happened actually last week as well, when we had the JPY bank holiday, and we got this retest over here. The whole group did not take this trade because we knew that during bank holidays we have unexpected moves in the market. Yeah, so we waited for Friday because that wasn't a bank holiday, and then we took a trade. So you got to weigh in the probabilities. So that's what I'll be looking with GJ for this week. Let me look at the weekly time frame once. There could be a possibility the weekly time frame also gets a retest at this weekly structure point, but if it does enter the orange area back again, I don't want to take a trade. Yeah, but it's possible it can. So that's simple. It's a very simple looking chart now on GJ. Let's look at gold. Gold has been very interesting as well. What do we see with gold on the monthly time frame? Triple tops formed, right? Triple tops. And then what do we see? The current candle is a nice bearish engulfing because it's overtook the low of the previous candle at the moment. If price does, if monthly candle does close like this is a nice bearish indication for gold, because now we got a triple top plus a bearish engulfing. Let's look at the weekly time frame. So let me delete these points. We got that move we wanted at 1854, 1836 last week. So looking at the weekly, what do we see? The weekly, it completely died off, volume died off, and we saw this momentum. What did the previous few weeks do? Copied the same momentum, right? So now we're about to approach that last weekly structure point, which was not retested at 1800 area that I've been mentioning for the last 2-3 weeks. I think price is going to move towards there, and then I'll be interested to see if this weekly structure point finds support, or if it wants to flip bearish on the weekly time frame as well. For this structure point down here to break, should be at 1890, let's call it 1790 area. So that would be very interesting to me on the weekly time frame to see what happens here. Let's look at the daily actually.
Clear bearish structure.
This is a nice, clean, very clean bearish structure on the daily. Yeah, every time it broke a structure point, it came back to retest, right? So let's see what price does here. I still remain bearish on gold just by looking at the higher time frames. So personally,
think we'll see the levels of like 1650 again?
it's possible. I think it's possible. The reason is why. Do you notice a price all the way down here? We see price breaking through structure points, not retesting. If you look at the daily time frame, actually, what do we see? Price gap, price gap, price gap, right? So price possibly can come all the way down here, possibly.
Very inorganic growth.
Yep. See, that's what these structure points show us, that price has to come back to retest them eventually. And that would be very high probability if this current structure point on the weekly, actually, let me draw that out. So there, if this structure point on the weekly breaks, there, and this would be at, let's call this at 1793. If this area breaks, we are completely bearish on every time frame, from monthly, the weekly, and the daily. At the moment, the monthly and the daily are bearish. The weekly is starting to look bearish, but still we need the structure point to break. Yeah. So this area for next week will probably be the most important area to look at if price reaches here. Yeah. Let's look at positions that we can possibly take. So this would be one, if price can break through and find resistance here. If not, if price does choose to retrace, let's see where we can go to. Yeah. So let me delete this. So price looks like possibly price can pull up here at this area there, at this supply demand. Let me zoom out. Let's see, possibly. So possibly price can pull up all the way inside the supply demand area there. This blue area that I've put out. If you want to look at the coordinates, those are the coordinates. And I think price possibly can pull up. And if you don't notice this candle, volume is slowing down a little bit. Possibly we can get a leg up there, and then a third leg extension there. Yeah. So this would be important. You can take a short position here, would be a little bit lower probability. So I would say manage your risk. And this would be around that 18, let's call it that 1820 area. So if you're going to take a position here, I would then target from this area all the way. I would target the 1800 area from 1820 all the way to 1800, and that's a nice big, almost a 200 pip move. Yeah, so that's how I would look at taking position here. Let's see. But keep in mind, when you're taking this position, you might see a smoother move towards here, but then once that breaks through, there's a possibility of a little bit of choppiness. Yeah. So once you take the move, your trade, just be confident with holding those trades. Let's look at the 1 hour time frame. 1 hour still looks bearish, little bit of contradicting. Volume died off, but what do we see with the 1 hour candle? We see rejection at this area here. So possibly price can still move down and not retest this area. But if it does move down, then just wait for the weekly structure point to break. If not, if you want to take a lower probability short position, if it comes for a retest of the supply demand, you can take it. Yeah. So I think that's it with gold. It's very simple. Simple structure. Let me look at 80 once. Yep, I think so. That's it. It's very clear. Yep. So yeah, that's it. We're done with weekly technicals. Yeah.